Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the major EURUSD 10 Lao presents.
On Wednesday, the EURUSD pair continued its upward movement and consolidated above the resistance zone of 1.1637-1645. The euro is recovering quickly after a month-long decline, and there are plenty of reasons supporting this rebound. Thus, the upward movement may continue today toward 76 Fibonacci retracement level at 1.1695. A consolidation above this level would allow for a further rise toward the resistance zone of 1.1789-1802. The wave structure on the hourly chart remains simple and clear. The last completed upward wave broke above the previous week's peak, while the last downward wave broke below the previous low. This makes the current trend technically bearish, but it has frequently shifted due to the changing news background. Donald Trump has managed to sign several favorable deals, which boosted bearish sentiment, as did Jerome Powell's statement following the latest Fed meeting. However, the latest labor market data and the shifting outlook for the Fed's monetary policy now support the bulls. On the 4-hour chart, the pair reversed in favor of the euro and rose to 1.1680 after two bullish divergences. A rebound from this level would favor the US dollar and a potential decline toward the 127% Fibonacci level at 1.1495. A breakout above 1680 would increase the likelihood of continued growth toward the next Fibonacci level of 161 at 1.1854. No fresh divergences are currently observed in any indicators, and break below the ascending channel does not yet indicate the formation of a bearish trend.
Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look.
By the end of yesterday, the British pound rose by 56 pips, reaching the target level of 1.3364. The upper boundary of the consolidation range between 32.53 and 33.64. Since the morning oscillator remains in negative territory, the price breakout above the upper boundary is being held back, making the preferred scenario a return to the lower boundary, 32.53. Today, the Bank of England is expected to cut the rate cut from 4.25% to 4.00. We previously noted that the market had not fully priced in such a cut, so the bearish scenario remains in base case. However, if the rate is kept unchanged, it could open the path for a rise toward 1.3631, the June 13 high. The MACD line, its blue line on the graphic, is approaching that level. The market's reaction to the BOE meeting remains to be seen. On the 4-hour chart, the price is consolidating below resistance at 1.3364. The morning oscillator is showing signs of sideways movement within the range. However, this situation is likely to be short. until the BOE announces its monetary policy decision. The move above 33.64 may be the false move.
That's all for today. See you online soon.